Hey, it's Mike, and for today's stock comparison, I'm actually going to be looking at two ETFs, two big commodity ETFs, to determine which one might be better for your portfolio right now. The first ETF I'm going to look at is the Spyder Gold Trust. It trades on the NYC on the symbol GLD. And the other ETF I'm going to look at is the United States Oil Fund. It trades on the NYC on the symbol USO. So yesterday, everything got hit hard. Gold was down a little less than 1%. And oil took a big hit, down over 5%. So this is my opinion on both of these ETFs. I definitely think that both of these ETFs, you should probably consider having gold in your ETF as a long-term play and consider having oil in your ETF as a short-term play. The reason why is oil is traditionally strong during the months of February, March, April, and May. We are in March, so we are in the middle of oil's strong cycle. As you can see here, the strong cycle started in February. It moved up from 35 up to a high of 48. It has moved down, but I think this is a nice pullback opportunity. I still think we're going to have a lot of uses for oil over the next couple of months. We're going to have more flights, more cruises, more people driving their vehicles. That's going to definitely boost demand for oil. There's also always the specter of geopolitical tension, which causes the price of oil to shoot up, whether it's in the Middle East or in Asia. So that's one thing you have to consider. However, I would probably jump out of oil after May, just because I think overall oil is going to be replaced by cleaner energy solutions. However, as a seasonal play, it's still very strong. Gold for me is more of a long-term play. You look over the past 6 months, gold has not done very well. However, we are going to have most likely some form of inflation. We had a $1.9 trillion stimulus bill pass, and then now there's a $3 trillion stimulus bill that was just introduced yesterday, and there's a possibility that that bill is going to be split into two because even some Democrats are a little leery of passing a $3 trillion spending bill. Obviously, there's probably a lot of good stuff in that spending bill. You know, we have to sort of upgrade our infrastructure. There's probably some stuff that could be cut out of there, but chances are there's going to be some form of spending bills passed. It's probably going to exceed $1 trillion, and that's really going to start to affect the value of the dollar. And because of that, people will run to Bitcoin. People will also run to gold. Over the past year, gold has been, flat or trading in a range. However, the thing about commodities is that they can shoot up very quickly. Like they have this sort of quiet period, and then they shoot up. And I think during the 2020s, gold will probably outperform equities as a whole. So I think this is a good time to accumulate gold while it's kind of quiet and no one's really thinking about it, because when things really get crazy, then a lot of people are going to run to gold. So the overall summary here is gold, I think, is a good long-term play for your portfolio, and oil is a good short-term or about 2-month play for your portfolio. So that's the stock comparison for the day. I hope you enjoyed the video. If you did, please be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, stock trading strategies, and market updates. Thanks a lot.